Alright, what's going on, y'all? Welcome back to the channel. Today we're going to be doing our first ever trade recap video. So we're going to be going over either a few trades it did take, a few trades you could have took, let out some information, stuff like that. So with that being said, let's hop right into it. Okay, so what you want to do before you start your trading day is you want to mark out market open. 8:30 is like the foreign exchange market open. I think 9:30 is the stock exchange, either or. You can go 8:30, 9:30. So once you mark out market open, you want to obviously do this before market open. You're going to go to your daily time frame, get your daily bias. So you can see for the past few weeks, this has been in a big downtrend, but you're also going to be careful where we are in terms of lows in this uptrend. So we took out this low, and we're pretty much aiming for this low, so it's safe to say that this is going to continue going down. Okay, so once you find your daily bias, typically I drop down to the 15-minute time frame, and I look for pre-market lows or highs. So like in this case, this is a pre-market low, and you can see exactly why that's important in a minute. And then I guess this could count as your pre-market high. It's a little bit of consolidation here, but that's your pre-market high. So with that being said, what you're looking for is price when market opens to either come above a pre-market high or below a pre-market low. And actually, you'll notice right in pre-market, like 5 minutes before it opened, you'll notice we create this pre-market high, but then we come down, we have a 5-minute break of structure with a fair value gap that formed with that break of structure. Perfect. And now, technically, I would be looking at this. We have a move up and a move down. This is our high. And then we have a move down and move up. This is our low. We retraced within this high. We made this low. And now we're retracing within this low. So what I would do is I would take my gain box, put it at this high and low, and then we get our equilibrium. So anything up here is a premium for sellers. Anything down here is a discount for buyers. So then I drop to the 1 minute time frame, and I'm looking for the fair value gap to get filled in our direction. So you can see this is the low we made. We're retracing up inside. This was our 5-minute fair value gap zone, and this was our 5-minute break of structure. If you look inside, from here to here is another 1 minute fair value gap directly inside our 5-minute fair value gap. So you could have easily went short here, targeting, you would probably put your stop, either you could go above that high, or if you're super scared or you want to play it real safe, you can go above this high. I personally would have just done probably above the break of structure, because I don't see a reason why I would retest the break of structure. And then you can easily target the low that it made down here, because it's going to want to take out that low. And this right here is a 1 to 5 risk to reward ratio trade. That could be huge. That could be a lot of money gained right there. So that, I did miss that trade, but that is trade recap number 1. Okay, so that was the first recap. As you notice, you don't need these giant moves to make a lot of money. Thousands of dollars could have been made within just this tiny range. So you don't need the moves from like here to up here to make thousands of dollars. That's what a lot of people get a misunderstanding. They always try to catch these big moves. If you can anticipate where price is going on a short term and get so good at it, you can bet and risk a lot more money to multiply your profit, and you can make thousands of dollars in very small moves. So the trade I actually ended up taking this day, I waited till 9:30, which was my New York session open, and I didn't really like this price action, so I kind of ignored this, and I don't like trading from lunch hour to 1, so I pretty much skipped 12 to 1 hour. And at this point, when I started looking at the charts, we were in a downtrend. So what I'm looking for is a 5-minute break of structure to an upside. Okay, so when you're looking for your 5-minute break of structure to the upside, all you're looking for in a downtrend is a move up and a move down that create a high. So you have this high that was made right there. That was the move up and a move down in the downtrend. I typically like to use the 5-minute time frame because once you break 5-minute order flow, it tends to hold 5-minute order flow for a good amount of time, at least enough for you to make a good amount of profit. So once you have this move up, move down, that would be your area where you want a 5-minute candle to close above. You want this body to close. These wicks, if it wicks above and then comes back down, that's not a break of structure. You need the full body to close above this wick. And once it did that, that was the break of structure right there. And then technically all I'm waiting for is a fair value gap. So once we proved we disrespected this high, we proved buyers are coming back in. I see this 5-minute fair value gap. And I just stayed on the 5-minute. I didn't even go down to the 1-minute for this one. And I will show you guys the proof of me taking this trade in a minute. Put your stop loss right below that low because it's not going to disrespect it. And now for profitability, you have a liquidity zone here, you have a liquidity zone here, and you have a liquidity zone here. And a liquidity zone is essentially just where people have their stop losses. So anybody that was going short here on this move down set their stop loss above this high. Anybody who went short here set their stop loss above this high. Meaning, so if price pushed back up here, it would knock people out of their trade, taking their liquidity. So that's a liquidity zone 1, 2, and 3. And so you can simply just target the high right here. And that is almost a 1-to-8 risk to reward ratio trade right there. And again, I will show you my entry on that right now. There you go. This green arrow is where I got in for a buy, about 0.3 lots. Took out partial orders at take profit 1. Did not take anything out at take profit 2, but then once we hit take profit 3, took out my full trade and we were done for the day. And that was a quick and easy trade. Okay, and that is it for the trade recap video. If you guys have any questions or if you would like me to start doing these more and more often, let me know down in the comments. But other than that, keep trading and stay safe.